Hey traders, checking in on the stock market today. If you look at just the percentage gains on the day, it looks like a pretty solid bull day. SPY up 0.76%, QQQ over 1%, NVDA over 3%, Meta almost 5%, Amazon up over 2%, Tesla big red. We'll look at all these names a little bit closer in just a moment. But it's how we got there that is setting the tone, which is having the bears celebrating a good bit with how today played out. So we had CPI numbers pre-market, 8:30 a.m., and I'm currently battling a cold, so bear with me while I push through this here. But we had the CPI reaction. It was significantly bullish, but it was very short-lived, and we spent the rest of the day giving back all of those gains. So essentially, it was a significant day of profit taking, and we have higher highs on the daily. The S&P 500 and the NASDAQ both hit the highest levels that we have seen in 3 months of trading, but we gave back a ton of that move. So if we look at this daily uptrending resistance line on the S&P 500 futures chart, we can see we rejected from it. This is more like a channel and not as a rising wedge at this point. So watching something along those lines. And if we look at the NASDAQ daily time frame, same deal, uptrending resistance line, hard rejection, and a big upper wick. So that is the response to CPI, which came in lower than anticipated. The average expectation was about 7.3, and we got 7.1. So now we move on to looking at the FOMC. The FOMC, in my opinion, has 3 reactions. We have the 2 p.m. reaction to the press release and the hard number, which the market is currently pricing in at 79% chance it's going to be a 50 basis point hike. Then we have more volatility, generally speaking, at 2:30 when Powell begins talking, because there is less certainty about what Powell is going to say, and it's more open to interpretation. And so we're looking to see, is Powell going to remain dovish and talk about further slowing of hikes? Is he going to talk about ceasing hikes? Is he going to talk about a lot of work still to go and inflation not coming down fast enough and all that and stay hawkish? That's where we're going to see a significant amount of volatility from 2:30 p.m. into the close. And then the third reaction is on Thursday and Friday when we see big money react. Because by the time Powell's done speaking, we've only got just over an hour of trading left in the day, and that is not significant. That's not sufficient enough for significant money to be moving around. So Thursday and Friday, we see what big money does in response to what Powell says in his press conference. So that's where we stand heading into tomorrow. And then from there, it's pretty much just looking at the end of the year. We've got, including tomorrow, we've got 3, 8, 12 trading days left. And that's it. So 12 trading days left in the year. We have no trading Monday the 26th, no trading Monday the 2nd. And that's where we stand. So let's zoom in a little bit. What were some clues here in hindsight? We knew there would be profit taking on that move up. So we looked for a tightening range, which is what we often get after significant volatility. I was on the 2-minute time frame, and I was watching the high. I was watching the low of the pullback, and then I was looking for a lower high compared to the high of the initial reaction, which we set. And then I was looking for a higher low compared to that initial low, which we got. And then another lower high. What's this? This is an equilibrium with a tightening range on the morning. As soon as we hit the new low of the day, bears score their first clear win. And the first clear win is a 5-minute downtrend confirming on both the NASDAQ and the S&P 500, indicating hourly consolidation is then underway. From there, we were looking at a 15-minute, I was looking for a 15-minute bounce. So I was looking for this bounce right here for a little bit of a bull trade for the potential that hourly consolidation would remain healthy and that we would shape up an hourly higher low. Essentially, I was looking for a 15-minute bounce big enough to shape up a trend change for the hourly higher low to be set. So I made an entry in the NASDAQ. I was trading the leveraged ETF TQQQ, and I was looking at QQQ. And I saw the bulls start to build a little bit of a base here, and I made a bull entry in the low 291s, and my target was 294. And I was looking for that to be a conservative target in case it was a 15-minute bear flag. Unfortunately, the bulls did not get there. We double topped just under 293. It was a 15-minute bear flag, but didn't bounce significantly enough to reach my target. So I stop out with a small loss, and the bears followed through significantly from there. If I was more agile, I would have recognized the double top, bailed on my initial position, break even, and then flip short on the 15-minute bear flag. But I did want to give the bulls a chance for that hourly higher low. The hourly higher low did come into the end of the day, but again, a much weaker bounce at this point, and a potential hourly bear flag. So what we're looking at overnight and into tomorrow is, can the bulls bounce significantly enough to try and see an hourly equilibrium form? Can we see bulls retrace? We have to break the bounce high that we saw this afternoon. And again, the burden is on bulls at this point because the bears scored a big win on the amount of profit taking. And we can see we're not even close to the 382 retracement at this point. So the bulls are going to have to control the overnight session if we are going to see a big enough bounce to try and shape up a tightening hourly range into the FOMC reaction tomorrow. But bears are confident at the moment. And again, the NASDAQ, very similar. NAS 100 USD, hourly bounce, potential bear flag at this point. And looking at our retracement sizes, it is insignificant. But if we break the bounce high overnight, we're then going to be looking towards that 50% bounce retracement, which, as we know, can potentially shape up an hourly tightening range into tomorrow. If we confirm hourly bear flags and break the lows of today, it will be big upper wick straight into daily consolidation, and the most important supports from there will be the low of last week on both the NASDAQ and the S&P 500, because if the lows of last week break, we are then breaking bearish from this potential rising wedge type pattern that is remaining alive. So overall, bulls need to save the reaction and have a green day tomorrow. Otherwise, bears are going to continue to gain confidence in the potential of a monthly lower high shaping up. A mixed bag as far as individual names showing strength and weakness. But first, the dollar. So like the indices have our uptrending resistance line that we just looked at, the dollar has a downtrending support line. It's a potential falling wedge trying to shape up. The dollar bounce is not nearly as significant as the pullback in the S&P 500 and the NASDAQ. The simple statement is, if the dollar has daily EMA 12 resistance, the bears keep complete control. I'm just keeping that as my guide. That's been my guide for weeks at this point, and it's proven nice and solid and consistent. So it's worth keeping an eye on this downtrending support, but in reality, it's daily EMA 12 for me. If we get over it, I will say, okay, a shift is underway, a weekly bounce is taking shape. If we don't, the bears keep their complete control over the dollar, and we will look for daily oversold conditions. Tesla continues to show massive weakness. We saw this right out of the gate. How could we see it right away? Because Tesla was still opening under the high of yesterday. The high of yesterday was 177s, and we opened at 175. Everything else gapped up. And I mean pretty much everything. SPY and QQQ, massive gap up, but you go down the list, and 19 out of 20 stocks that you're going to look at out of major names gapped up. Tesla did not. It gave bears a clear resistance level to play off of. Any bear shorting Tesla to start the morning is risking 1 to 2% before they would stop out if the high of yesterday broke. And obviously the reward is very significant, as we ended up dropping from that open 10% to the downside. There was a significant bounce from there, 5-minute stair step. Didn't even change the trend. As soon as that 5-minute stair step breaks, the reward for the bears in 20 minutes was a quick 1% pullback, actually 10 minutes, a 1% pullback. And then we just traded up, again, watching for the hourly lower high. But the long story short here is Tesla is a lead bear as long as it keeps showing us it's a lead bear. And we will see signs of it shifting. There's no need to try and nail the bottom on Tesla, because we will see Tesla divided by QQQ showing us a downtrend turning into an uptrend. That will be the indication of a shift in momentum. But for now, Tesla's got a lot of negative headlines. It's the bears' favorite short over the last 2 weeks. And it's that way because they've got the headlines and they've got the buzz and the attention. And Elon Musk's over there focusing on Twitter. That's what the narrative is. And we don't have a ton of support in this range. The next level I'm looking at is back here from November of 2020, and I'm looking down at 144, and then there's a gap to fill at 137.48. Keeping an eye out for oversold conditions, but we've seen daily oversold happen already. It's really weekly oversold that would get my attention if we were to see that. But look at where we're positioned comparative to the broader market. The broader market hit the highest level in 3 months today, as Tesla hit the lowest level in years. What happens if the broader market does set a monthly lower high? What if we get a bearish reaction to the FOMC? Tesla is positioned extremely poorly for that. And look at the volume behind today's candle. It's a lot of bear volume. So it'll shift eventually someday. But again, not trying to nail the bottom on Tesla. And even me looking for, hey, I'd like some Tesla long-term no-touch position in my IRA. I don't have an interest in entering right now. Maybe if we get weekly oversold and daily oversold and hourly oversold all at the same time, I'll look to initiate a position that I can then exit a bit out of on a short-term oversold bounce and try and keep on top of that cost basis. But it's all bears. Hourly downtrend and daily downtrend will remain our guides. On the flip side, some names that showed us a bit of strength, NVDA, again, definitely profit taking, but look at how clearly over the recent highs we currently are. And we are still in an hourly uptrend. An hourly lower high is the most likely scenario from here because of how much we pulled back from the high of the reaction. But it's an hourly uptrend, it's a daily uptrend, and we can pull back notably and still be in a daily uptrend right now. So NVDA is standing out with relative strength. The semiconductors broke the range that we've been watching, but we closed right back within it. So not a convincing break at this point, but again, certainly a bit stronger than other sectors out there. Other places we saw strength, Meta had a bullish reaction to a TikTok bill ban or whatever. That's good for a little short-term intraday pump every time somebody in politics talks about that. But we did not break 124.67, which means Meta is still battling weekly EMA 12. And this has been the arch nemesis for Meta and the best friend for Meta bears all year. And so we are battling. We would have to reject from 124.67 and lose 112.88 support for a convincing weekly rejection. And we're certainly closer to resistance than we are to support at this point. A little bit of relative strength elsewhere. Where was it? Netflix to start the day, but it's still that rising wedge on the table. We broke resistance of 329, not much follow through, and we've got the rising wedge still on watch. And we would need to see a break of 308.85 to lose the daily uptrend. And Netflix divided by QQQ is still an uptrend, showing us relative strength. We had that notable day yesterday, but no follow through at the moment. We pretty much did what the NASDAQ did today. But again, I'm watching closely for this chart to shift, for relative strength to turn into relative weakness, if we are going to see this rising wedge break bearish into weekly consolidation. And essentially what I'm looking for, why I'm paying more attention to this rising wedge, is because we bounced 100% and we're at monthly EMA 12 resistance. And so I'm watching, do we see this daily rising wedge break bear to shape up a monthly rejection from EMA 12? So again, it's just something I'm watching for clues in. I'm watching for clues on this on a daily basis. And we're going to be looking for Netflix to give us an hourly lower high as the result of the next bounce. Anything under 332.72, bears have to confirm the hourly downtrend for that daily rising wedge to continue to try and shape up. So it definitely has my attention. Just like the energy sector had my attention as a bear because of this tightening sideways range and looking for it to be a laggard bear sector and looking for it to follow oil weakness. It took days. It took days to play out. I was early. I believe I shorted, I forget where, but it was sometime around here. I was too early by a couple days. I got it eventually, but it takes scouting a trade like this on the longer term time frame, daily and weekly charts, and it takes generally a few days to potentially shape up. So I'm just keeping my focus on it, looking to see if this daily shapes up. And if we get a bearish reaction in the markets to the FOMC, definitely going to be focused on Netflix as a bear as well. Healthcare, All-time high test today, 142.25. We failed to break it by a fraction of a percent. Daily EMA 12 back in play. A break of 137.94 would get my attention. Again, we're watching, does the Captain Team Bull ETF that matters the most in the S&P 500 in terms of the strongest, most important name. There are definitely some sectors stronger, but healthcare is the most important in terms of weight in the S&P 500. Does it join Team Bear? Does it lose daily EMA 12 for the first time in months? And does it lose the daily uptrend? That is what the bears really want to see. It wouldn't be surprising. I mean, weekly stair step at this point is over 2 months in the making, and we will just be looking for a weekly high or low, but bulls are clinging to that daily uptrend at this point. We saw the financial sector lose daily EMA 12 for the first time and start that weekly consolidation, and from here it would be a big win for the bears if XLF were to break 34.39. Breaking 34.39 would confirm a daily downtrend, and it would pretty much negate the possibility of this weekly bull flag, which the bulls tried to confirm today. At this point in time, this weekly consolidation is still very healthy. It's up to the bears to confirm the first daily downtrend. When's the last time XLF set a daily lower high and lower low? And your answer is that hasn't happened since we bottomed 2 months ago. Energy sector, daily bounce underway, but rejecting from 87.22 resistance, at least initially. IWM, we know has been weaker. Growth names were some good bears today. IWM did not break resistance, double top in the 189s, failed to break that level. And if we look at our growth names, ARKK, big pullback, 38.31. We broke resistance by 7 pennies. That's a double top into a hard rejection. We had crypto names get trashed. Coin, look at that gap up, bearish engulfing. New all-time lows. If we can't break 49.85, bulls aren't doing a thing. And these names that were weaker ended up being the better shorts. Coin down 17% from the high of the day. MARA, same deal. We know this has been the lead bear in the space, down 17% on the day. Riot down big. Cannabis names down big from the highs. CGC dropped 10, 11%. Potential daily bear flag shaping up. US cannabis can't even get a bounce going. It's still in free fall, falling knife mode. With bears in absolute control, we will see a daily bounce soon, but there's no sign of it at this point, and the all-time low is back in play at 870. So all of these names that identify as growth names definitely remaining weaker, and the sell-off today magnified that weakness in a lot of these names. The biotech sector, 2-day equilibrium resistance was in play this morning, and we rejected. No, it wasn't in play. We didn't get close. I take that back. 2-day. So anything under 85.84, just a lower high. We did have a solid hourly bounce. This is one of the best hourly bounces out of a sector that we saw this afternoon. And the burden is on bears to confirm the hourly downtrend by breaking the low of today if our 2-day lower high is going to be set. And again, I'm just viewing this. This is the first time I've had clarity on the biotech sector in a while. But we're looking for that lower high, anything under 85.84 for a continued tightening range. Metals, they're keeping a rising wedge in play. So uptrending resistance line on gold, still a daily uptrend. We would have to break 1777 support for that to change. Silver is stronger. So silver's uptrend resistance line, I would have had it like that. I could tweak it a little bit and still get a few touches there, but I like it a lot better on gold than on silver. And the difference with silver is look at how much we can pull back and still be in a daily uptrend. From the close today, silver can pull back 6% and be in a daily uptrend, whereas gold can only pull back 2%, less than 2% before we lose the uptrend. Miners also failing to get any follow through on the resistance break. So again, we're scouting potential weekly consolidation in the metals and miners. The miners already started some weekly consolidation first thing this week. but it goes in line with the dollar. The dollar has to get over daily EMA 12 for the metals to see any bear follow through, in my opinion. And of course, we can anticipate volatility tomorrow in the metals and the miners, along with everything else. The VIX had a major pullback today. Big old bounce. Hourly equilibrium is shaping up there. VIX has been a bit crazy this past couple of weeks, just in terms of seeing unusual things. If you go back and look at the VIX and look at the daily RSI in the last 12 years, we hit the lowest RSI levels we've seen in 12 years just recently. And then also the fact that, 10% gap up when the market is green, very unusual. So VIX trading very unusual these days. Oil, daily bounce following through a bit. 4-hour uptrend is our guide as we scout a daily lower high, anything under 83.34. Is this a downtrending support line to keep an eye on? It's my first time looking at it. Nah, not really. Gonna stick with the daily downtrend. Just looking for the lower high. Natural gas bulls kept a bit of control today. Was watching for the potential of a 4-hour lower high to be the result of this bounce. But we hit the higher high, and we still have 4-hour EMA 12 support. So natural gas has not topped out on this daily bounce just yet. Technically still looking for the daily lower high. Then we're going to look for a daily higher low with a whole bunch of space for it. But a very notable bounce, still in control of the bulls at this point. So all in all, the bears are comfortable after today's trading with where they stand heading into the FOMC. We have a double top. Again, the resistance zone is set. SPY 410, 410.49. There's a double top there. QQQ broke resistance, but only by $1 and some change. And if it's a bearish reaction, again, we got daily supports are going to be in play at that point. And today was just a confidence booster for bears. Granted, that could mean, there's a decent amount of shorts that we'll need to cover if it's a bullish reaction tomorrow. But overall, just in terms of sentiment, bears are walking away today. Even with the green day, if you just look at the percentages today, look like, it's a pretty solid day for the bulls. But not with how it's shaped up. Today, bears are definitely walking away with some confidence. It's not game over for the bulls, but bulls are a bit uneasy with the size of that profit taking. So the most important thing for tomorrow FOMC, in my opinion, is not the size of the hike. It's what Powell says about what to expect in Q1 2023 with what the Fed is looking to do here with rates and with what they feel about inflation as well. Hope you had a good day. I'm not trading a whole lot this week with all the volatility, but more so being sick, definitely an impact. But we'll see where we stand when the dust settles. And again, be protective here into the end of the year. Don't want to spoil the year in the final week or two. And also got to be aware of wash trades and things like that. Although it's a bit late at this point, should have been on top of that 30 days before the close or 30 days before the end of the year. And looking forward to starting my journey, learning about futures. I'll be making content about that to start the new year. But going to get that ball rolling with these holidays that we've got coming up and those days off. Hope you're well, do good things, and we will see you tomorrow after we get some FOMC reaction.